and welcome back to Cost Allocation and Responsibility Accounting. This is part three. Part three, we will begin with learning objective 2. Explain why companies decentralize and use responsibility accounting. So why do decentralized companies need responsibility accounting? Well, in a small company, the owner or the top manager often makes all planning and controlling decisions. Small companies are most often considered to be centralized companies because centralized decision-making is easier due to the smaller scope of their operations. A centralized company is a company in which major planning and controlling decisions are made by top management. Okay? However, when a company grows, it is impossible for a single person to manage the entire organization's daily operations. So we have decentralized companies where they split their operations into different segments, such as departments or divisions. Okay? A decentralized company is a company that is divided into business segments, which with segment managers making planning and controlling decisions for their segments. So in other words, a decentralized company, they will have several departments, and the manager for that department will actually make the decisions. So what are the advantages of decentralization? One is it frees top management time, okay? It frees time for the top managers. And it works whereas they delegate responsibilities for daily operation to business segment managers. Top management can, however, concentrate on long-term strategic planning and also higher level decisions that affect the entire company. Okay? Another advantage is support use of expert knowledge. Decentralization allows top management to hire the expertise, right? It allows them to hire the expertise each business segment needs to excel in its own specific operations. Another advantage is improves customer relation. A segment manager focuses on just one segment of the company. Therefore, the segment managers can maintain closer contact with important customers than can the upper management. Okay? So the decentralization often leads to improved customer relations and also quicker customer response time. Another advantage of decentralization, training. It provides training. Decentralization also provides segment managers with the training and the experience they need to become effective top managers. And last but not least, another advantage of decentralization is that it improves motivation and retention. Okay? So when you empower segment managers to make decisions, it increases managers' motivation and it increases their retention. So with that, it improves job performance and satisfaction. However, with advantages, you will have disadvantages. So some of the disadvantages of decentralizations are: one, duplication of costs. Okay. Decentralization may cause the company to duplicate certain costs or assets. Companies can often avoid duplication by providing centralized services. Another is problems achieving goal congruence. Now, goal congruence means aligning the goals of business segment managers and other subordinates with the goals of top management. Okay? Decentralized companies often struggle to achieve goal congruence. And segment managers may not fully understand the big picture of the company. So they may make decisions that are good for their division, but they could harm another division or even the rest of the company. The decentralized companies delegate responsibility for specific decisions to each subunit, whereas they're creating responsibility centers. You could call it that, okay? So what is a responsibility center? A responsibility center is a part of the organization for which managers has decision making authority and accountability for the results of those decisions. Now, each manager is responsible for planning. Each manager is responsible for controlling some part of the company's activities. Lower level managers are often responsible for budgeting and controlling costs of a single value chain function. A cost center is a responsibility center whose manager is only responsible for controlling costs. Manufacturing operations such as the tablet computer production line at Smart Touch Learning are cost centers. 2, revenue center. What is a revenue center? What are their responsibilities? Well, a revenue center is a responsibility center whose manager is only responsible for generating revenue. A kiosk that sells sunglasses at a local mall is an example of a revenue center. The business is part of a chain, so the local manager does not control costs. Profit center. Let's look at profit center. Well, a profit center is a responsibility center whose manager is responsible for generating revenue, controlling costs, and producing profits. The manager responsible for a grocery store is accountable for increasing sales revenue. They are accountable for controlling costs to achieve the profit goals. Now, a profit center responsibility reports include what? Both revenues and expenses to show the profit center's operating income. And 4, an investment center. Well, an investment center is a responsibility center whose manager is responsible for generating profits and efficiently managing the center's invested capital or assets. So the managers of investment centers, such as division managers of chain stores, they are responsible for 1, generating sales, controlling expenses, managing the amount of capital required to earn the income, and also planning future investments for growth and expansion of the company. Here you see in Exhibit 7, it summarizes the types of responsibility centers, their managers' responsibilities, and their responsibility reports. Okay? Here in Exhibit 8 of Smart Touch Learning Organization Chart, it shows at the top level, of course, you have your CEO, and the CEO oversees the 2 vice presidents, and the vice presidents are the CFO and the COO, and those 2 oversees the 2 divisions. You have division managers, generally have broad responsibility, including deciding how to use assets to maximize return on investment. And most companies classify divisions as investment centers. Now, each division manager supervises all the activities in that division. Product lines are generally considered profit centers. So the manager of the standard tablet product line is responsible for evaluating low-level managers of both cost centers, such as plants that make standard tablets, and revenue centers, such as managers responsible for selling standard tablets.